Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. I am joined by the illustrious co-host, the master of disaster, who's here to help us walk through the markets, Mr. Charlie.
Anybody missed me?
So Charlie and I are going to talk about the markets this morning. We're going to identify some levels as he is going to help us talk about these levels in the S&P. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates as they happen. So let's go ahead and dive right in. So in the S&P this morning, we can see that the S&P is kind of going sideways. And whenever we look at the S&P, Charlie, this blue line down here, if I look at this blue line, what do we think about this blue line? Is that a ceiling or is that a floor? And so since that's a floor, what happens when the market breaks through the floor? What direction does it go?
It's going to keep going down until it hits a new floor.
Very good. So we know that the markets may keep going down until it hits a new floor, but are we close to that floor today?
Not much. And I actually had a idea before we started this about it going up.
So if the markets do go up, then we would look for this area up here as a place where it would reverse and then come back down. So, but I don't really have any clear levels between where we are now and this area up here. So in days like this, the best thing to do is just to wait. Wait for the markets to give you a clear signal. This is a day that I think it makes sense just to wait and to not force a trade. That's kind of what I'm seeing on this level today.
Yeah, I get it, because it's kind of in the middle.
Very good. And when it's in the middle, if it's not near the floor and it's not near the ceiling, it's kind of floating in between, and there's really nothing in here for me to lean on. So I'm going to let this one go today and move over to the NQ. The NQ looks very similar. Now, yesterday we talked about this 15-minute level. For those of you that were in the Trader Summit, we were able to catch this 15-minute level for a nice move. I know a number of traders caught this for a pretty good run, but now that level is dead to me. And so I look at the NQ picture and I see a very similar picture to what we had in the S&P. We are sitting above the floor as we're not anywhere near this area for the breakout, and we're sitting below this ceiling area here. So looks a lot like the other picture did in the Nasdaq versus the S&P. Wouldn't you think, Charlie?
Yeah, because that one's kind of floating in the middle too. It's above the floor, but it's below the ceiling, and even if it does go up, it's going to reverse and hit the floor.
Very good. So Charlie giving some high-level commentary. So let's shift gears a little bit, take a look at crude oil. So looking at crude oil this morning, as I zoom in on here. Now, yesterday we had a huge run-up in crude on the news that the Saudis will curb production, and then the Saudis came back and said, I'm not so sure we're going to curb the production as much as they say we are. And then they said, yes, you are. And so it was just one of those kind of a days. But we did have this demand area down here. We were overall net bullish on oil into yesterday. We had the breakout area here as well as here, and then it came into supply and sold off from this area. So now I need to remove all of those levels. And so when I look at this, I gotta taking a look at my 4-hour chart, which is my bigger picture, I have I finally have a higher swing high, higher swing low. I've actually got a bigger picture upward trend telling me that there's a chance that prices will continue to rally. So when you look at this, Charlie, what direction do you think it's going?
Well, according to my brain, it's kind of going, I think because of the top candlestick right there, it's probably going up, and it's already very close to the blue line, which is the ceiling. So there's a very little chance it's going to hit the floor. But there's also prices, if we look back, to where they go up, but then they fly down. So got to be aware of that.
Yeah, so Charlie's looking at the area over here to the left as he's giving his commentary on the day's markets movements. We have this area of supply here that could act as a bit of resistance on this breakout area. So if we get this breakout trade here, without the basing, then I believe that this resistance, that this supply would possibly be a stall point. If that breakout occurs with good basing, it may blow through there, and then you've got some supply up above us. Now, remember this: every supply level in a big picture upward trend has to be a confirmation short as we continue to move higher. Next is gold. Looking at gold, we had a gold breakout yesterday as gold hit our level and broke through these two upper wicks. We didn't get quite the basing that we would like in here for that breakout to be valid, and it continued to move straight up. So now when I look at gold on the 4-hour time period, we've got still technically a downtrend. Just because I had this swing high it didn't give me a new swing high. I still technically have a downtrend in gold. And so looking at that technically still being a downward trend, I want to pay attention and say, okay, if we break below here, we may get a very small time frame opportunity. But if this breaks below here, then I think you have a lot of room for price to continue to move down. So keep an eye on this one today. If we get much movement today, this one could be a decent mover.
What I think about this is that if that part of the market keeps going down through the floor, and then the new floor becomes a ceiling, then the new floor breaks, and then it hits the green line, and it's just gonna bounce right up. So I don't think the market's going anywhere here. So, yeah.
It's a good observation, Charlie. When we look at this, I think of and when I teach Charlie how to do this, I think of it as we teach it in floors and ceilings are the blue lines, and then slides and mountains are the green lines. And when we look at these green lines, this is really the beginning. Oops, sorry, hit the wrong button there again. This is the beginning of a mountain, right? The beginning of the mountain here is an area of demand. And so what Charlie's looking at is, okay, if we break below 1623, price has 1623 now may become an old area of support becoming resistance. We then may break below 1595. If we do, then there's clear room to go to the bottom of the mountain, and that's where who's going to take over when we get to the bottom of the mountain?
The bulls. And if it breaks through the new floor and then the old floor, aka the new ceiling, it's going to keep going up until it hits that ceiling up there.
Very good. So let's go take a look real quick at our bonds and currency markets. As I look at the ZN, our ZN levels, we are still going sideways in between our zones in the ZN. So, literally nothing to add from what we talked about yesterday. We are just hovering in the middle there between our areas of demand and supply. And then looking at the Aussie's coming down into our little bit of sideways price action here, our little bit of a zone. However, we're basing in front of that zone. And basing in front of the zone is what we affectionately refer to as the kiss of death. However, that demand area that's there could be a catalyst to get us back up to this area of supply. So I don't think that demand area makes sense to take a trade off of at this point, although it could theoretically drive us back up just a little bit. When I move this to the 15-minute chart, the smaller time frame, I've actually got a decent little level right here on the 15-minute that might actually be another good opportunity as well. So you can go with either one of these. I think either one of these makes sense from a supply level state, but I don't know that the demand area down here is still going to be valid simply because of the basing we're getting in front of the level. Matter of fact, we could get a breakdown from that area. I feel like you'd have to look to this demand area here as your better trade for a potential reversal. Moving over to the euro. So yesterday in the euro, we were in class in the Trader Summit when we talked about this breakdown. So leave me a comment down below if you're able to catch this breakdown, as it did come down and hit our eventual target. Now, this is a breakdown. Remember, Charlie just talked about it. When it was here, it was acting as the ceiling, and then it was here, it was the floor. And so now price broke down below the floor, and we've got to look up above now to think that that old floor could become the new what, Charlie?
The new ceiling. And then if you go down, if you keep going down, it'll hit the new floor, which is a pretty long way away. Remember that I talked about it could go up as well? It's probably not going to do that because Dad just added lots of green lines, so it's probably going to go down to the floor.
Yeah, we may bounce off of those areas of supply which are now up above us, and price could continue to take over. So I think the euro, pretty nice continuation of a downward trend. Canadian dollar moving along sideways in between major levels. Nothing really much to add inside of this piece. It's actually giving us a little bit of a triangle pinch where we may see a big move one way or the other. I was surprised to see that we didn't get much movement off the oil announcement in the Canadian dollar, a little bit, but not like we did in oil from a percentage scale. Certainly last but not least, Great British Pound and Japanese Yen. Great British Pound is never last and it's never least. Hence the reason it's the Great British Pound. It's going a little bit sideways here before our potential breakout area. I'd like to, see if we've got an opportunity in here as this breakout could occur and give us a decent trade. We could also look to this level up here as a potential reversal, very similar to the one that we have in the euro. And then the Japanese yen is sitting above our potential breakout area here. We've not yet gotten basing. This would not be considered basing as of yet because we've just come straight down into it. If you don't like the setup, which I'm not in love with the setup of that breakdown, I'm going to put my lines right around here for a potential reversal point.
So what I think is that I picture it as the red candle down there, that tiny red candle is trying to bounce off the floor, per se, and it's going to keep going because of that reversal line, bang, 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 until it goes right through the floor. But then the base of the mountain is going to get hit, and it's going to go right back up.
Charlie is predicting the market 5 moves ahead. We'll see how he does. So, but that's good analysis. And the purpose of having Charlie on here today is to show you don't need to overthink your markets. Don't overthink the markets. Look at your levels of supply. Look at your levels of demand. Identify your levels of support resistance. Finding your fair price value areas, which we talk so much about at tradersarmy.com. That's what we actually spend a lot more time talking about. Is where the market's gonna reverse. And for Charlie, we use the concepts of floors and ceilings and slides and mountains, but they're all different things that you can do. I will say this, on a day like today where there's not as much setting up for you immediately, you don't force a trade. Also, make sure that you are comfortable with holding things over the weekend. Make sure that you have a lot of your protections and your options in place if there's something you want to hold over the weekend. But I want to say goodbye, everybody. Hope you guys have a great day. Stay safe.
See ya.